Hello, hello. Good afternoon. If you can hear me, let me know. Let me know. Hi guys, how you all doing? Good afternoon. Hi. Hey Stephen, how you doing? Hey Juha. I'm just trying to sort out something here, so give me 1 second as I figure this out. All right. I think I got this sorted out. So, welcome again everyone. Hope you're doing well. Hope you've been trading well. And if you can see my screen okay, we're going through the webinar today. Oops, let me see, where's my face? Okay. Super. Hey Noel, how you doing? How's Philippines? I'll give it a couple of minutes, a minute or two, and then we should get started. Great to see everyone here. So we are going through the webinar series, the live trading session today with IronFX. So do let me know as we get through the sessions at any point in time. If you have any questions, if you have any trading questions, you would like to find out more about anything in particular, do let me know. Do put it into the chat and let me know. So while we wait that 1 more minute, what I'd like to do is, as Noel has already done, let me know where you're joining me from. So we've got Noel from Philippines. If you can all put in, where are you joining me from? I'll be super keen to find out. Where are we reaching out to? Finland. Hey, Juha. Fantastic. Just keep it coming. All right. We've got everyone. We've got a lot of people in all different time zones. So thank you. Good. Thank you for taking the time out today. In all different times of the day to join us during this live trading session. I hope you have questions. I'll be looking forward to that, and I do hope you have. You look forward to some possible trade ideas, possible trade setups that we might come across today. All right. So, as I said already, webinar series today, live trading session with IronFX. Just a quick risk warning and disclaimer there. Any information shared in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only. All right. So this material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. What it means is that I will be sharing with you my thoughts, my ideas, what I see in the market, what I think is likely or could happen in the markets. If you are going to be jumping into any trades, please, please, please make sure you do your due diligence. Make sure you check your analysis, check your charts, check your lot sizes and leverage. Make sure you're not over trading or over leveraged, because through my experience coaching a lot of traders, the thing that hurts a trading account the most is not so much a bad trading strategy, but more about a poorly risk managed account where a trader over trades or over leverages. All right. So with that, let's kick on. Just a quick introduction. My name is Jin Dao. Everyone calls me Jin. That's Jin. Right. I'm one of the prop trader and market analyst here at the Everest Fortune Group, and I'll be happy to do this session, going through with you some thoughts. We do have a big news to be released tonight from the US, so I'll be sharing with you my thoughts, my ideas about possible trade setups. I have been trading for more than 10 years now. So back in 2008, I started. So a lot more than 10 years now. If you have any questions, I'll be happy to, hope to give you some tips, some ideas, some advice, possibly. And I look forward to the information helping you with your trading journey, hopefully to make it a lot more profitable, a lot more longer term. All right. So let's get started. Take that away. And here we go. All right. How I approach the markets is a little bit different compared to what I've seen around. Okay. A lot of times I've seen a lot of traders, first thing they do when they look at the markets, they jump onto the charts, they load up MT4, they jump onto the charts, they look at the price action, they look at candlesticks, they look at patterns or indicators and levels, right? I do it a little bit differently. The first thing I do every day, well, almost every day apart from weekends, first thing I do, I jump onto Forex Factory, I check out the news. I check out the news to give me an idea of what has happened, right? What has happened, what is going to happen, and what could happen as well, right? So with that, for example, today, we saw early morning, and this is GMT +8. Early morning, we saw the New Zealand dollar GDP quarter on quarter was a minus 0.2%, expected to be a 1%, came out at a 1.7%. All right. So with that, if I was up at that time, I would have anticipated to see possible dollar or Kiwi dollar strength or brief Kiwi dollar strength because of a good GDP number, very good GDP number quarter on quarter could push the New Zealand dollar towards the upside. As we know, and I'll show you slightly later, the Kiwi dollar actually moved a little bit, but then set in consolidation as well. And there's a reason for that. I'll share with you shortly. Later into the morning, we saw the Aussie employment numbers. Employment change was a minus 40.9K, expected a 35.5, came out at a 33.5. It is slightly less than expected, right? Slightly less than expected, but in material terms, not significant. What's more interesting is the unemployment rate, right? It was 3.4%, expected to stay at a 3.4%, but actually climbed slightly to a 3.5%. So unemployment rate in Australia currently at 3.5%, increasing slightly. What we actually saw in this case, or what we would have expected to see in this case for the Aussie dollar, was some weakness in the Aussie dollar. We saw that. And then after that, we saw a bit of a bounce, and now I'm looking for that continuation towards the downside. But all that's done, all that news is done. The main thing, the big feature news coming up in a couple of hours, right? It's 6 o'clock here, GMT +8 at 8:30. So in 2.5 hours time, we do have the US retail sales number, right? US retail sales number month on month was 0%, expected to be a minus 0.1%. Okay. And core retail sales number month on month was a 0.4%, expected to be a 0%. So it looks like, based on these forecasts or expectations, was 0.4, expected to be 0. So they're looking like a low number, a minus 0%, or possibly even a minus number there. Retail sales number was 0, expected to be minus 0.1. Looks like a bad number there. Just based on that, as a first level or first approach, what I'm looking at is that could a weaker retail sales number and core retail sales number be released, right? If it comes out at 0 or minus 0.1 for core retail sales, if it comes out at minus 0.1 or minus 0.2 even, a weaker retail sales, a weaker core retail sales number would show that people are not spending in the US, right? Consumers are not spending in the US. And if they're not spending, companies produce less, overall economic activity drops. Why they're not spending is possibly because inflation in the US is at a record high and still climbing based on the recent data. So recent data on Tuesday. On Tuesday, US CPI continues to climb. US inflation data was 0.0%, expected to drop slightly, but it did climb 0.1. Core CPI climbed quite significantly, expected to be a 0.3, came out at a 0.6, right? So we saw that inflation continues climbing, makes things more expensive, possibly leading to that weaker or potentially weaker core retail sales and retail sales data to be released in 2.5 hours time, right? So with that, I'm thinking one scenario, what if we see a weaker US dollar? What if we see a weaker US dollar? Where could prices head towards? I'll plan for that scenario. And then in the alternative scenario, I'll also be planning to say, what if at a 0%, what if it comes out as 0.1 or 0.2? It's an easy number to beat, right? So we could actually see this. If it comes out at 0.1, it'll be green. It will signal a positive number. Retail sales number, if it comes out at 0 or 0.1, it will be a positive number again. Then we could see that dollar strength come back into play, right? So I'll be looking at this, or I'm looking at this now. I'm planning for two alternatives, right? I'll be planning for two alternatives in the scenario where we see dollar weakness, which pairs I would be looking at. In the scenario where we see dollar strength, which pairs I'll be looking at. Okay, so that's for today. For tomorrow, on Friday, you can see not a lot of news to be had. We do have the US consumer sentiment, but it looks like it's going to increase, but we leave that for tomorrow. Most of the trades will probably, most of the volatility will probably happen tonight, leading into tomorrow afternoon. Okay. Any questions so far? Everyone's here. Any questions so far? If you do, let me know. Okay. While I'm looking at the news, I want to show you a couple of big important news that's going to be happening soon next week. All right, happening into next week as well. What we do have into next week, I want you to pay attention to this, will be on Thursday. Thursday morning GMT plus 8 at 2 a.m. Okay, we do have the US Fed funds rate. Interest rates possibly or most likely going up 75 basis points for the US from a 2.5% to a 3.25%. Okay, what I'll do here is that, as you guys, I think most of you, quite a number of you are in the UK. So let me just put this towards the UK timing, so you can all look at that. So it's GMT there. So this is London timing into next week, just to let you know, on Wednesday at 7 p.m., right, London time, interest rates from the US looking to go from a 2.5 to a 3.25%. This could be a high impact news, or this is a high impact news, but, right, this is a high impact news, but that 75 basis points could be highly priced in already. It has been signaled from a very long time ago from the Federal Reserve that they will be increasing rates by 75 basis points. The CPI data has continued to grow, and that's providing that additional reinforcements or reconfirmation that they do need further interest rates increases. So as much as this is a 75 basis points increase, could be a bit priced in already. So just be extra careful with that, all right? And following on from that, on Thursday, London time now, we do have interest rate decisions to come from the Swiss National Bank. We do have the Bank of Japan with their monetary policy statement and press conference to be released. And for the UK, we do have interest rates decision as well. All right. In this case, current interest rates at 1.75%. They are looking at possibly another 75 basis points increase to come from the Bank of England. All right. So what would you notice here is that on Wednesday to Thursday, we're going to see a lot of central bank news to be released. Firstly, from the US FOMC, 75 basis points increase, followed on with the Bank of Japan with their press conference and monetary policy statement. Following that, the Swiss National Bank, possibly they could surprise with an interest rate decision hike as well. And then we do have the Bank of England with their interest rates decision, possibly that 75 basis points increase again. Following on from that, we do have some PMI numbers for the Eurozone and the UK on Friday. So that's the outlook for the week. A lot of news to be released into late next week. What that could mean is that we're going to see a lot of volatility into late next week. Leading up to that, we might actually see markets trend a little bit before consolidating into the lead up of these events. All right. So with that, still no questions from anyone yet, or happy or good? Let's look at the charts. Okay, so let me take that away first. All right, so this is the Aussie dollar on an H4 time frame here. All right, I'll show you first on the H1 this morning. This morning's news. Let me move this back. This morning's news at 9:30 a.m. Right, this morning's news at 9:30. We saw here that push up, and then when the news got released, we saw that push back down again. So from 10 o'clock, that candle push back down, right? So one key point I'll focus on here is that reaction at that, firstly, where was it? This point there, okay? 0.6770. We saw it reacting at this level, bounced a little bit there, and then on the hourly candle, it shot up, hit that level, and rejected to push towards the downside. Bad news, bad employment numbers from the Aussie, pushing the Aussie dollar towards the downside. From 10, 11, 12, 1, there was about a 25 pip move, not a big move towards the downside, okay? But what you can see is that prices continue sitting pretty much in a bit of a consolidation before this session, testing a little bit lower, but then right now sitting still at that 674, just above 6740. What I'll be looking for on the Aussie dollar here is if price can break below that 6730, right? But the maximum or the lowest point it will go to, based on the current levels, will be at about 6700, right? 6700 towards the downside. What this means is that if we do see that dollar strength, come into play, price likely to come down towards that 0.67 level, dollar strength pushing the Aussie dollar down, but it's not likely to be an attractive trade. If you did sell it down, you could have a 20 pip take profit, a tight 15 pip stop loss, slightly over 1:1.5, about a 1:1.5 risk reward ratio towards the downside. Not a great trade I'll be looking for on the Aussie dollar towards the downside, right? If we see that dollar strength. Alternatively, what I would say is that you would look at the Aussie dollar if we do see the US weaken. right? So retail sales number comes out. It's a minus number for core retail sales. It's a minus number for retail sales number. Then what I'll be looking for is if price can push up above that 0.677, right? So it could come down now. And if it pushes up above that 6770 level, if it does that, then I'll be looking for a buying opportunity. So on the Aussie dollar, on the flip side, I would actually be more tempted to look to buy above 6780 towards that near-term support turned resistance level. About a 45 pip take profit. Can keep my stop loss quite tight, about 20 pips. A 1:2 risk-reward ratio towards the upside there on the Aussie dollar on the H1 time frame. Wait for the news to be released first. See the data. See the price move towards the upside. There is a lot of space for it to move up, break above that resistance. Then I'll be looking to buy it up. Okay, so that's my view on the Aussie dollar based on the news if we do see a weaker US dollar. With that, looking at the Kiwi dollar, take all of that away now. Looking at the Kiwi dollar, one thing I'll do is I'll show you to you on the H4 time frame, and even on the daily time frame, you can see that at this point we are at a very key low level on the Kiwi dollar. Okay, the last time we got below this point was back in 2020 during the pandemic. I'll put a line there, the last low point at about 5920. Going back to the current, the most recent low point is at about well, based on the candles there, I would have said 60, but you can say even 5975. Okay, so again, very similar to the Aussie dollar. If we do sell it down, it could go down, but as it goes into the area of the low, historic low since 2020, we're likely to see a lot of choppy price movements. We're going to see price spike down, spike up, move all around there. What I actually be looking for is if we see that come down and bounce towards the upside, right? Let's see whether it can bounce towards the upside. And you can see that level there, right? It's good. It formed a good support, bounced off, formed a good near-term resistance level. I'll be looking to buy if the Kiwi dollar can close above 60, let's say about 6020, right? So I would say that I'll be looking for a buying opportunity, even safer at 6030, 0.6030. And this is on H4 time frame. So you could be looking at about a 40 pip stop loss, about 120 pip take profit towards that high of 0.6158. You're looking at a 1:3 risk-reward ratio towards the upside. This is a longer term trade. If you looked at it on the H1 time frame, so taking that away, on the H1 time frame, what you would be looking for is similar. I'll be looking for a buying opportunity above 0.6030. All right, stop loss below the support within that area, so about a 30, 35 pip, 40 pip stop loss. Take profit could still be up there, or you could even just have it at that near-term support turned resistance level again. You're still looking at a 60 pip, 70 pip move towards the upside. You're looking at almost 1:2 risk-reward ratio towards that 0.61 resistance, round number resistance level. Okay, so you can see now that if we do see bad news for the US, right now it's pushing a bit lower. If we do see a bad news for the US, we're going to see the Kiwi dollar, we're going to see the Aussie dollar push up towards upside. I'll be looking for it to break above a resistance level or the near-term resistance level before I will look to buy towards the next resistance level. This is on the weaker dollar trade. All right. Any questions so far? All good? All righty. Okay, good. So with that, what happens? Where do we, one more to look at if we do see a good or a bad, right? This is a good or a bad news from the US. Then you're going to see this. You're going to look at the yen, the US yen. All right. If we look at the US yen, what you're going to pay attention to at this point, currently US yen at that 143.42 level, you can see that it's been bouncing around that 143.50 level. Tried to break up, couldn't go up. Tried to go lower, couldn't do that either. But it's bouncing around that price level of 143.50. So about there. Okay, you can see that the last time it came down, tested and bounced, broke lower, tried to break up, failed, turned back down, broke strongly towards upside, towards that 140, almost 145 level, before turning back down again. Again, this price level comes into consideration, now looking like it's pushing up again. All right, so this will be the pair that I'll be, the US yen will be the one that I'll be looking at in either a good news or a bad news scenario. All right, in a good news scenario, good US news scenario. Hey Taylor, I will jump onto gold. Maybe I'll jump onto gold after the US yen. So hang on tight there. All right. So what happens with the US yen in a good news scenario? Stronger US dollar, we're going to see the US yen push towards the upside. What I'll be looking for is for price to break above that 143.80 level, right? So you'll be looking at entry above 143.80, take profit towards that near-term high of 145, so about 100 and almost 110 pips towards the upside. Stop loss just below that support level, 40 pips. You're looking at a 1:2, almost 1:3 risk-reward ratio towards the upside on the US yen, if we see that stronger US dollar. Alternatively, retail sales numbers gets released, we see a weaker dollar, right? Because of a bad news, then we're likely to see the US yen drop. We're likely to see the US yen drop because of a weaker dollar. Where could it drop to? I would say that it could get to about that 141, or a little bit more conservatively at a 142 level. Okay, so what we'll be looking at is that it'll come back up now, test around this level, look for it to turn down and break lower. Then I'll be looking to sell down from about 143, below 143.20. Stop loss again, tight at about 45 pips, just above that resistance level now. Take profit about 100 to 110. You're looking at a 1:2.5 risk-reward ratio towards the downside, towards that 142 support level. Okay, so quite interestingly, you know, US yen currently at that 143.50 price range, price area. You could be looking at this for either the upside or the downside potential, depending on what numbers the news gets released at. All right. So any questions there? I saw, say Juha, I saw your question on Brent. I will get to that after gold. All right. Okay. So as promised to Taylor, let's look at gold. XAU USD. Cleared it out. All right, so just a question there. Would you trade gold on the longer term or on the shorter term? Will you be looking at gold during the news? on the shorter term, all right? Okay. So if you're looking at this, I'll show it to you on both time frames. Trading on a 15-minute, fantastic. All right. So I'll show it to you on the different time frames, right? Firstly, on H4, and then after that, down to the H1 time frame. Okay. I tend not to do analysis or to do a webinar analysis on the 15-minute time frame because it gets a bit time sensitive. So, it gets changes very quickly as well. So we do it on the 4 and then onto the 1. So gold currently at that 1688 level, dropped quite strongly. I was actually thinking, could it get to 1680, right? Why 1680? Because of that point there, back in August 2021, where it dropped to that 1677, that was 1681. Okay, 1678 level or 77 level, and then it bounced quite strongly. We can also see that, let's say 1675, it dropped to that point. First time, it bounced off in March after hitting the 1675 level or 1676, bounced up. Again, end of March, bounced strongly towards upside. Again, in August, came very close to it in July this year, bounced up, and right now approaching that level again. So what I'm actually looking for here is that would we see gold come down, maybe test or break a little bit, false break, and then push towards the upside, right? So I'm looking, are we going to see this push towards the upside on gold because of that very strong support level? If I went to even a weekly time frame, you can see that as I drag that line right across, where was it, 1677 or 1675. We even went as far back as in May 2020, where it's hit that level and bounced strongly towards the upside. So this is at a very strong support level, right? So again, now back to the H4 time frame, I'll be looking for that. Can price, take this away, can price come down, test 1674, 1675, and then bounce back up? Or I would say that could it be in this area, right? Price will come down, bounce around within this area like that. Could do that. And then if it does break up, could we see that big upside move? Right. So this is on H4 time frame. How high can it go? Well, it could go very high, but I think that a reasonable level would be for it to bounce back up, break above 1690. Right. If it breaks above 1690, then I would say go back to the recent high of 1735, about 1735, stop loss below that point, or even, no, I would say below that point, about there, well, below that recent point because it's bounced off. Then you're looking for, oops, that's wrong. Hang on. You do that instead, right? Above 1690, take profit there. Stop loss about there. You're looking at a 1:2 risk reward ratio towards the upside on gold. H4 time frame, as we look for it to, looks like it's failing to break lower. It's a bit of indecision there. Most likely, what's going to push this towards the upside is if we see that dollar weakness come into play, right? It's not going to be always perfectly correlated, but it's going to possibly have some impact as we see the dollar weakness come into play. We could see gold push up from this support level. Hey, Ismet, for sure I will do that. Okay, so right now we've only gone through a couple. So Aussie dollar, Kiwi dollar to push higher, Aussie and Kiwi dollar to push higher. if we see that dollar weakness from the news later. The yen, the US yen, both upside or downside potential, depending on what the data is going to be. So you would look at the data release, you look at the dollar index volatility, then that's going to give you a good hint of where the US yen is going to be, right? So there is the weakness, there is a weakness and or strength, and then I'll show you a couple more where you can be looking at for US dollar strength. Okay, gold in this case on H4 time frame, we'll be looking at if we see dollar weakness as well. Dollar weakness, gold strength, inverse, slightly inverse, non-perfectly inverse relationship between gold and the dollar. Looking at gold on the H1 time frame, this is why when you look at it on a smaller time frame, it can look a bit over convincing, right? It looks like it's in a consolidation now, and then it looks like it could break strongly towards the downside, quite similar to what happened over the last couple of days, right? Consolidation and a break towards the downside. I think that in the short term, maybe, right, we could see this push a little bit lower, but I think overall, that's a very key support area right now. I'm looking for it to bounce off. I wouldn't be looking to sell gold on a short term. I think it's a little bit too risky at such a key support level. I'll rather wait it out, look for that bounce before looking to jump towards the upside. All right. So I hope I answered your question there, Taylor, and also Pedro. Fantastic. You're most welcome. Okay. And also on Ismet, hope I answered your part of that question. Aussie dollar, Kiwi dollar on weakness, yen possibly on the yen on a with strength or weakness. I'll look at Brent as well from Juha. All right, so Brent has been very interesting. Okay, so Brent, I definitely won't say H1 is just too volatile. Most likely you're always going to get caught out due to spikes and shadows and tails on Brent. So I would say, try to do it on the slightly bigger time frame. What's happening with Brent or energy prices in general? We're seeing that demand is slowing down, right? Demand is slowing down, which should cause prices to drop, but supply is also slowing down, right? Supply constraints are still persisting. We have Russia still threatening to cut oil supply, gas supply towards the Eurozone, right? We have, I think, Nord Stream is turned off already. So there is a serious supply crunch right now, right? So because of that, we actually saw that push towards the upside on Brent. At this point right now, it is trading at 94.19. I think that, from my view, I think that is going to trade between this range, right? Until something is confirmed, until they're going to say that they're definitely not, they're falling short in supply, right? Then we're going to see a big push towards upside, or they've solved a supply constraint. We're likely to see Brent trade between 91.80, 91.81, and 96.50. I think that we're going to see price do that, bounce in that range. What could happen is if price breaks towards the upside. If it breaks towards the upside, then you could see a very high level of 105 because big news has to happen, right? A big news has to happen to push Brent towards upside. Supply constraints pushing it up, then you'll be looking only to buy. I would say look to buy only if it breaks above 98.20 or 98.50 to be extra safe, because you don't want it to fake break and come back into the range. If it breaks above that level, It could look very similar to what happened here in August, broke above, shoots up towards that recent high point. All right. So, Juha, I hope I answered your question there on Brent. Looks like it's going to be trading within the range, looking for it to break towards the upside above 98.50 to possibly, I don't think it'll get there in a hurry, but possibly get towards the 100 or 105 level. If it does break downwards, I think that there might be limited downside. 88, or round number at 88, there could be that key support level, very low level there. The last time we saw it was back in January this year as it scaled up from there. All right, so I think that if we do see price drop, break below 91.81, could come down towards 88, but more likely I'm more tempted to think that it's going to push towards the upside. All right, super, you're most welcome. Noel with US CAD and US Swiss franc. Okay, so before I get to US CAD and the Swiss franc, I want to do a quick one on the euro and the pound dollar. There we go. Where's my euro? I know it's here somewhere. Okay, there we go. Take all that away. All right, so euro dollar, right? Euro dollar right now still trading just below or trading along that parity level, right? Trading just along that parity level, just below that. But you can see that that downside has been quite limited towards that 98.97 level or 99 level at the lowest point of 98.65. Okay, in this case, I'll be looking at, could price push down, break below the breakout of that consolidation? Good US data, right? Good, strong US data could, surprisingly strong US data, could push the euro down towards the downside, following that trend. So it's dropped, it's consolidated. Can it break lower again? I'll be looking for it to break below 0.9955. Then look, oops, someone said fib and I draw a fib level, not that one. I'll be looking for that. About a 70 pip take profit, about a tight 30 pip stop loss, a 1:2 risk-reward ratio towards the downside. But we need to see the dollar strength. We need to see price break below 9955 before I'll be looking to sell it down towards that very low point. I wouldn't bet on the euro dollar dropping below that for now. Okay, so bad news, Aussie, Kiwi, good news, euro, good news, bad news, US yen, and then pound dollar dropping again, right? Pound dollar dropping quite strongly right now. I'll be looking for this to come down towards that 1.14 level. Strong US dollar. Okay, back to the H1 time frame here. It's coming very close. I was actually very tempted to jump onto this trade at the last hour, just before this call, but I wanted to monitor my trade, so I didn't jump onto it. Has moved since already. Next level, I'll be looking for it to break below that recent low, that overnight low, at about 1.1480 to sell down towards, right? So I wouldn't consider that for now, towards that low point there of 1.1418. Again, this will be dollar strength to push it down on the dollar good news scenario. Sell it down, stop loss about 25 pips, 30 pips stop loss. Take profit about a 50. If I move this down to there, it would be about 50 to 60 pip. Take profit, almost a 1:2 risk-reward ratio towards the downside. Okay, so good news, bad news scenarios, we have it covered on 2 currency pairs each, and then the US CAD coming up with the US Swiss franc as well. All right, so for Osman, what kind of strategy do you guys work? I do a combination. I use a combination of fundamentals together with the technical levels being my support levels and trend. So I'm a lot of trend following. I tend not to do counter trend, but a lot of trend following trades. Okay. I like this one, US CAD, as it approaches that 1.32 level. This is going to be similar to the US yen trade or the US yen analysis. All right. What I'll be looking for, you can see last time it hit. Where can I do that? Okay. Last time it hit and hit with double top as it broke that neckline, we saw that big drop. Again, bounce. I see that. Can it come down? Can it form a double top? Or if I test again, can it form a double top and drop back down again? So I'll be looking for either a selling opportunity on the US CAD, on the Loonie. All right, take all that away first. I'll be looking for it now, possibly test that 1.32 level, reject on the bad news scenario, weaker US dollar, pushing price down, then quite simply a rejection. What happened here on the 1st of September? Again on the 7th. Now looking for the 15th. If it comes up, test and reject that level, then I'll look to sell down about a 30 pip, 40 pip stop loss. You could go all the way down towards that 1.2975 level. A big 61:6 risk reward ratio towards the downside. Could even have about a 40 pip stop loss or 1:5 risk reward ratio towards the downside on the US CAD. This is on H4 time frame. Okay, so I'm looking for that rejection to push down. On the flip side, if we see that dollar strength come into play, then we're going to see the US CAD push up. Right, you're going to see a US CAD push up, which would mean that it's at a very high point. Okay, daily time frame. The point beyond 1.32 is about 1.3424. Okay, so again, back to H4. If price breaks above that 1.32 level, we could see the US CAD climb strongly towards the 1.34 level, but we're going to see that zigzaggy move in between. Okay, so you could be looking at a long position above 1.32, so about 1.3240. Take profit 168, 170, stop loss about 60 pips, almost a 1:3 risk reward ratio towards the upside. Okay, hey Luis, how are you doing? How's Peru? All right, so I hope I answered your question there, Noel, on the US CAD, US Swiss franc next. Okay, US Swiss franc, I think Stephen just said, we use fib levels, works very well. You can see how it's reacting to all those fib levels so far, but I'll clear all that out for now. And if I just did that one level towards the upside, you can see that the US Swiss franc has dropped. It is testing that 0.95, almost 0.9550 level, 61.8% fib level there. Okay, so you can see that the trend has been pushing towards the downside. We saw that retrace back up towards 50%, and then now it turned back down again. What I'll be looking for here in this case will be if price can break lower from 61.8. Right, if it can break below this point, then I'll be looking for dollar weakness to come into play. Right, in this case, about a 40 pip stop loss towards that 78.6 level, about a 60 pip or 65 pip take profit, a 1:1.75 risk reward ratio towards the downside on the US Swiss franc H4 time frame. Okay. Makes sense so far. You're most welcome there, Noel. Okay, and then lucky last, we'll look at the index, the dollar index. Okay, so this was the last time I drew this. My last analysis I did said it was going to come down, break below that level. It did that. I was going to say it's going to bounce back up. It did exactly that. But next analysis was that it's going to turn back down from this point, right? It's going to turn back down from this point because of a potentially weaker retail sales number. We're going to see that push lower. Okay, so still holds, the analysis still holds. We're going to see we saw it break from that trend line towards the downside. Right now at 109.70 or 109.72. If it does turn down, break below 109.45, and we can see that push towards the 108 support level. I don't think, well, it's going to be very crucial for the US dollar index to stay above 107.75, just to make sure that, or in order to make sure that the uptrend is still valid, right? The uptrend is still valid. So I think it'll come back down towards 108.16 and then possibly consolidate and possibly bounce back up again. So looking at the dollar weakness to come in. If we don't see the dollar weakness, if it just comes down here and bounces towards the upside, I think the limit is at about, firstly, the 110.72 level. Could go higher, but I think that retail sales number tonight is possibly not going to be the big push strongly towards upside. We're going to see some strength coming in. US CAD BS taking control now. Let's go back to that. H1 time frame. Right, so yep, bears, well, pushing up is CAD bears getting in control. So pushing towards the upside. I'm looking to see what happens here. You can see that this was on when? The 14th of September, big strong push. I actually thought that based on that push, we're going to see it break above 1.32. Didn't happen, hit and turn back down again. So I'm looking to see what's going to happen here. Might come up close, but I could just consolidate around this level before turning back down again. On an M5, let me see how to get to the 5 here. There, you got it. You got it. Thanks for that, Stephen. Bit of a pin there, turning back down again. It is a couple of minutes towards the end of the candle. So we could see a bit of a retrace back here. Right, I'll do one of the things I do like. I do have my Bollinger Bands in there. Okay, so why I like my Bollinger Bands is because I do realize or tend to see that once it's outside, price is outside of the Bollinger Band, we do see it trace back in again. So it could come back in slightly before turning back up again. I'll possibly leave it till the news event, not very far away now, before we can look for it to push in either that direction at that 1.32 level. Okay. Any further questions at this point? While we're here, are you guys planning to actively trade the news, or are you looking to, oh wow, look at that push down, right? Or are you looking to sit it out and only trade after the news? I think this will be a very nice trade, especially if it rejects that 1.32 level. You know, even on the H1 time frame, keeping it a little bit tighter, you could be looking at selling about 1.3140, stop loss bit tight, a bit long at a 75, take profit about 100 and towards that recent low, 180 pips towards the downside, a 1:2 towards the downside. Pedro waiting trade after the news. That's good. That's good. Let the fireworks blow past before jumping in. I like the idea as well. All right. So what I tend to do is during the news or before the news release, I'll be looking at it on the M5, M15, M5, and M1 to look to see if I can do a quick scalping trade or not, a couple of quick scalping trades. But if not, then I would be, if I don't get into that trade, then I'll wait it out, let the hour close, and then get into the more medium term or intraday trades after the news. All righty. I hope you had a good session. Do you guys have, let me know, did you guys have a good session? Is it useful? If you got any feedbacks, please let me know. I'll be happy to take on any feedbacks and comments. Fantastic. You're most welcome there, Stephen and Pedro. All right. So with that, I do try to keep it simple. You know, trading doesn't have to be tough and complicated. We're trying to keep it simple and straightforward. All right. So with that, is there a group where we can swap ideas on a daily basis? Pedro, I'm pretty sure there is. Maybe reach out to the organizers on IronFX, and I'm sure they'll point you towards the direction of the group. All right. So with that, trade well, trade safe. Take care now. Bye-bye.